Palantir is currently definitely overvalued with a PE ratio of 356. How long will it take for Palantir's earnings to catch up with this PE ratio? Now, I have been very bullish on Palantir in the past for sure. However, now I'm reviewing their data again. It's clear to see that I don't think they are going to match their expectations. But even if they do really well in the next quarterly earning reports, I still feel as if this stock is currently overvalued. I have gained massive profits off Palantir in the past, but this was pure momentum for me. I don't think this can last for too much longer. I don't see how much longer this can be too sustainable for. Before we do actually get into this video, I just want to say that Palantir is an amazing company. If you do hold stock, this isn't an attack on anybody. This is just me saying that currently, as of right now, this stock is overvalued. However, despite me saying this, I do think that Palantir stock is still going to grow exponentially over the next potentially 5 to 10 years. So it is not a bad stock at all, and I do believe that it will definitely grow into its PE ratio. Eventually, it's definitely a very good stock. So starting off on a year chart, Palantir is up 325%, so congratulations to anyone that got in the early stage of last year. Like I said, the PE ratio is currently at 356. So this PE ratio could tell us one of two things. It could either mean that investors are pricing in a lot of growth for the future of this stock, or that it is currently just massively overvalued. I think it's a mix of the both for sure. I think we are going to see a lot of growth in Palantir's earnings. However, it's not going to be enough to make up for the 356 PE ratio. That is just outrageously high, with the earnings per share being at 0.2. I just think that no matter what this stock does in the next couple of years, it's going to still be overvalued. Despite that, with it being a massive hype train around this stock, it still could potentially go up. We're seeing a lot of resistance currently in the stock price of Palantir, so it is definitely an interesting one. Personally, I can't recommend to get into the stock with the P ratio being that high. It's clear to see that it's overvalued, and we will see later on in the video why exactly it is overvalued. But what is Palantir for the people that don't actually know? I'm going to do a quick overview for you all. Palantir is a data analytics company that builds software for integrating, visualizing, and analyzing large data sets, often to aid in decision making. Their main products are Palantir Foundry and Palantir Gotham. These are used by organizations in various sectors, including government, finance, and healthcare. Palantir Gotham is primarily used by government agencies for intelligence, defense, and law enforcement. Palantir Foundry is more widely used in commercial sectors, assisting businesses in managing and analyzing their data to optimize operations, predict trends, and make more informed decisions. So like I said, I wanted to keep that brief because I feel like most people in this world will now know what Palantir are and what they do. But I just wanted to bring you to a fourth quarter earnings release for Palantir. This is set to come out on the 3rd of February 2025, so that will definitely be something interesting to watch. So put that in your calendars if you do hold Palantir stock. Going back to the Q3 for 2024, we saw a growth of 30% year on year, which backs up the fact that I don't think that we should be seeing such a high price of Palantir stock at the moment. So like I said, we're seeing a lot of resistance in the stock recently. We're seeing actually a bit of buying pressure in the last couple of days. However, despite this, you can see here on the MACD trend lines here, we actually entered a long position on June the 24th. And currently we're looking as if this long position is just about to close, turning it into a short position, which could actually start to see a massive decline in Palantir stock in the next coming weeks. With us just now above the 50-day moving averages, as soon as we actually fall below the 50-day moving average, we will see a lot of large firms start to sell off Palantir stock as they use the 50-day moving average as a general support for their investments. Looking on a 15-minute chart here, we can see that we are actually still in a long position, and these two MACD lines are actually pulling apart from each other. But I do think as soon as we see these cross over a large range of charts, then it's definitely one stock to short, I reckon. But again, we are seeing a lot of resistance in this stock. To see it bounce back like this, despite the P ratio being outrageous, I think there is a lot of resistance that is in this stock for sure. With a sharpened Sortino ratio at 12.75, that is still relatively bullish for the stock and actually indicates a short-term risk to reward to not be that bad. It's not the best. You do want to see that a bit higher if you were to actually invest now, but that is actually relatively bullish. So we're now going to move over to my system here. We can see a liquidity ratio on the left here. So for liquidity, Palantir is perfectly fine. If anything, this is actually quite outstanding. This is really good. With a liquidity ratio of 17.9, that means for every dollar of debt in which they have at least $17.9 of liquid cash to pay this back in, which is outstanding, as in the world of business, cash is king. You can't be selling your assets in order to pay out your debt. Trend lines are expecting this to be relatively stable, so absolutely nothing to worry about here. If we move on to the retention rate here, again, outstanding, with a retention rate in the last quarter being 19.8%. Ideally, you want to see a company around 10 to 15, with it being 19.8. It's really quite good. Again, with them being founded in 2003, it's pretty much where you would want to see them, but much higher, of course, because you would want to see them around 15%. So really good. Again, trend lines are actually projecting this to be relatively stable again. Now moving on to the free cash flow here, we can see this is a bit more volatile, of course, but again, it is relatively increasing quarter on quarter, looking relatively strong. So again, nothing to be worried about here. So now if we look at an exponential chart for Palantir, we can see here that we have obviously had this decline in the last few weeks to months. But despite this, the exponential chart is still projecting a lot of growth. This is just a trend line, of course. You can't base too much off of this. And it is a very similar story with the volume. It's actually relatively stable. Nothing to be worried about, particularly with this. On the 90-day exponential charts, it is pretty much the exact same story. So looking at the figures for Palantir, obviously we have that an outrageous P ratio on here. It's saying it's 344 with a 52-week high of $84 and a low of 16. This is a difference of 68 with a current price at 70 and a beta of 84, which means we outperform the Nasdaq on a volatility scale 84 times, which can be seen as either good or bad. So why do I think Palantir is overvalued here? We've calculated the intrinsic value on the left here. We have Graham's formula. We have an original and a revised using the earnings per share of 0.2, I would say fair growth rate of 40% year over year. We can see an intrinsic value here of $13 on the more bullish formula here, and on the more bearish we have $7, which is massively different from where we currently are at $70, with an acceptable margin of safety at 75%. This gives you an acceptable buy price at $10.40 and $5.50, which obviously puts it at a massive sell currently. So when you play with the numbers to see where the intrinsic value actually lies with the current price, if we can get it around that area, they actually need to have a growth rate year over year of 240%, which I know they are doing well at the moment financially, but that is just really hard to achieve. So I don't think the P ratio is fair for Palantir currently. I think they are massively overvalued. I don't see them getting 240% growth rate year over year this year. I would like to be proven wrong, of course, because I do think Palantir is an amazing company, but I do think they are massively overvalued currently. Looking on the left now, this is Peter Lynch's value. This gives us a result of 0.1, which indicates that the stock is heavily overvalued. This is again using the earnings per share at 40%. If I change that back up to 240, let's see what happens. So even with a 240% growth rate, we are still 0.69, so 0.7, which is still massively overvalued again. So to be fairly valued on Peter Lynch's value, which is known to be a bearish indicator, they would need to be looking at 300% year over year growth, which again is just very hard to believe they will achieve that. So now taking a look at what the analysts think about Palantir, they are pricing in Palantir to be a current hold with a price target being below $50 here at around 40. It's clear to see that the analysts are also saying that Palantir is currently overvalued. Typically, it's very rare to see the analysts actually base this at a sell. It's quite often, it's quite a bearish indicator when you see it at a sell, obviously, but I would also say it's a bearish indicator when you see it at a hold. This is, of course, based off of 22 analysts. Within the next 90 days, they are projecting a stock price at a high of $100 and a low of what looks to be around 30. So it is clear that there is a lot of volatility projected into Palantir. So that concludes my analysis on this stock. Again, I imagine this video will get a lot of hate as the Palantir hype train finds this video. It's pretty typical for stocks like these to have a lot of hype around them. But of course, I'm just saying my honest opinion and what my system is saying. So in my opinion, of course, Palantir is currently massively overvalued. The only way the valuation will catch up is if their quarterly earnings reports are outrageously good, which is an understatement for sure. They need to see at least 200% year over year just to justify somewhat of the PE ratio in which it is currently at. So I hope you have enjoyed this video and found it somewhat useful. Again, I'm not a financial advisor. This is just my own personal advice and what I think about these stocks. If you do want to see more analysis on January stocks, please do click the playlist down below. With that being said, I will see you for the next video.